Okay, um, welcome to the continuation of forex masterclass, and what you see on my chart here is the next thing on uh, the next topic to be discussed, and this topic I'll be talking about currency. Okay, remember I told you that in this market we don't deal with commodities, we deal with currencies. So we want to look into the currencies that are traded in this market. Now, the simple answer to what is traded in this market is money. Money, that's what we trade. Because you are not buying anything physical. Okay? You're not buying anything physical. Okay? So, because of the fact that um, it is not like, the standard way of buying and selling, sometimes it gets confusing. That's the reason why I want to use this. I want to use an analogy to explain it to us. Okay, so everyone would be clear. Okay, so I'm going to go down here so I can see. Now, let's assume this old box here is the Japan. It's Japan, right? This is Japan. Now, consider that inside this old box there is 1 million boxes inside, smaller boxes, 1 million. So let's just imagine that I can't draw 1 million boxes, but I need you to use your imagination that there's 1 million boxes here. Now, when you buy, and these boxes represent currency. Okay, so now we have 1 million currency or 1 million Japanese currency in this box. Now, when you buy the currency they use in Japan, which is the yen, right? When you buy the Japanese currency, you are buying like one box. Yeah. So if you buy, um, multiple of, let's say you bought 10. So you're buying like 10 boxes. So in other words, now you have bought 10 currency, that 10 portion out of the 1 million of the currencies that is traded in Japan, that is available in Japan. So in other words, you can say you are buying the Japanese economy, or you are buying share in the Japanese economy. Now, definitely you want this box that you bought here to grow bigger. Like, you are a speculator, so you want profit. And for you to make profit, Japan has to prosper, because if Japan is prospering, definitely your investment in Japan will definitely prosper. But if Japan is, having a tough time, it will affect your investment. So consider buying currency of a country as buying a share in that country. So if the country goes well, you make profits, because the price of the currency is usually a direct reflection of the market's opinion on the current and future health of this, economy, of the economy of Japan. So if the current economy in Japan is good, is nice, and it's attractive to investor, and in the future it's also still attractive, definitely your investment is going to go big. The shares you're buying will, gain profit. And by the time your shares gain profit, you're making profit. And if, the other story is the case, then, if let's say the Japan economy is not doing well, then your you be your the shares you bought in the currency, which is the the shares you bought in the country, which is the currency in form of currencies, would reduce. Okay, so that's like a simple analogy. I hope everyone is. It's just like saying, I come to you, and then you're coming to me and you're telling me that you want to buy a portion of what I'm selling, and that if it goes well in profit, you know, whatsoever I'm selling is a reflection of me myself. So if I know how to market what I'm selling very well, and investors start investing in whatsoever it is, because you have bought part of it, you've bought a share of it, definitely it's going to go well for you too. It's going to be profitable for you too. So that's what I'm trying to say here. Now, um, in general, right, the exchange rate of a currency um, against other currencies is the reflection of the currency of the condition of that country economy, okay, compared to other economies. So remember when I was explaining the Canadian dollar, let's come back to our Canadian dollar and US dollar analogy. So let's imagine this is US dollar, it's not but Japanese yen. This is the US dollar and this is the Canadian dollar. If for one reason the United States economy is doing well and you have dollars, um, and you have, let's say, $10. In contrast to Canada, and you know, maybe the Canada economy where it was not underperforming, definitely the currency would drop. So the rise of this currency and the drop of this currency. So let's assume you are now going to Canada, or probably you just want to switch your currency to Canada. So you are selling your United States dollar at a higher price, and you're buying, you know, the Canadian dollar at a lower price. Okay, that's like, this economy is doing well, so it's not doing well. Your profit is going up very well here, very well here, while this one is underperforming. Okay, that's like simple explanation. Now, there are currencies that we trade in this market are grouped into three. We have the major currencies, the minor currencies, and the exotic. The major, the minor, and the exotic. I'll be talking about currency extensively in coming classes, but like I said, um, this is a broad class, so I want to make sure I'm explaining everything to you guys so you get it. Okay, I don't want to rush it. Now, let's talk about the major currencies first. Now, there are actually, initially, it was believed that there are only 5 major currencies. Of course, there are 8, but initially it was believed that there are 5, and the other 3 that makes up the major currencies are known as commodity currency. So most traders don't really want to believe that, you know, commodity currency is a major currency. Okay, some traders don't really believe that. But in this our explanation, we believe that there are 8 major currencies. And I'm going to teach you how to identify currencies in the forex market. Now, every currency has a code, the country that uses that currency, of course, the currency name, and the nickname that we trader call it, you know, just a fancy name just for fancy sake. There are 8 major currencies. The first 5, right? This the 1, 2, 3, 4, 5 are considered as the main major, like the real major currencies, and the remaining last 3 are considered as commodity currencies. But like I said, we'll be looking at everything as one major currency. Now, for you to identify a currency will have a code, the country which the currency is being spent, the currency name, and the nickname. The USD is the code for the currency that is spent in the United States dollars, in the United States rather. And the name for that, for the currency that is spent in the United States, is called dollar. Forex trader, we call it buck. The code for the currency in the Eurozone, right? And I want you to know that the Eurozone consists of, I think, 8 or 16 countries. Can't really remember right now. But what I'm trying to say here is it's not just one country, it's a combination of countries that use, that spends euro. So the Eurozone has a code, and the code is EUR. The currency name is euro, and we forex trader, we call it fiber. In Japan, the code is JPY, the currency name is yen, and the nickname, as for forex trader, is yen. In Great Britain, the currency code is GBP. The currency code is GBP. The name of the currency is called pound, and the nickname for traders, we call it cable. And I want you to memorize this nickname because when we get to technical analysis, might be using these nicknames very well. In Switzerland, which is the country, Switzerland, the code for the currency spent there is CHF, and the name for that currency is franc, and the nickname is Swissy. In Canada, the code is CAD, the currency name is dollar, and the nickname, we call it as forex trader, is Looney. In Australia, the code is AUD, the currency name is dollar, we call it Aussie. And in New Zealand, the currency code is NZD, the currency name is dollar, and the nickname is Kiwi. So I want you to kind of, memorize all these because it will be very, very important. In fact, it's the fundament for whatsoever you're going to be learning in this masterclass. So I want you to please know this in your mind. Now, currencies, symbol, now, all these code, country, currency, nickname, of course, we can't just write all these things down because we are trying to talk about the United States dollar. So there is a way we present each currency. There is a code that each currency is presented in that helps us to easily identify this currency. And this code is known as the ISO 4217 currency code. You don't need to go into that. That's, for historical sake. Okay. And every currency in the world has 3 letters. Every currency in the world has 3 letters as its code. And it is this code that we use to identify, okay, this is the currency you're talking about, and this is the currency you're not talking about. For our example, I'll be using the NZD, which is the New Zealand dollar. Now, like I said, currencies consist of 3 letters. The currency code consists of 3 letters. The first 2 is the country's name. So N for New, Z for Zealand. So, that's the country name. And the last one, right? Last one, I'm just going to separate that so that we can see it separately. This last one here, which is D, stands for the currency spent in the country. So what's the name of the country NZ, which is New Zealand. And what's the currency spent there? Dollar, which stands for D. So when we now combine it together, now when you see somebody talk about NZD, just know that they're I'm coming to, let me just kind of make that, yeah. So when you see someone talk about NZD, right, just know they're talking about New Zealand dollar. I'm going to use another example, okay, for the sake of iteration. Let's say let's use let's say the dollar. The first two letters, US, that's the United States, that's the name of the country, and the last letter is the name of the currency spent in that country, which is the D. So now we have the United States what? Dollar. So every currency has its own code, and I want you to please also memorize the code because we'll be using them in our coming classes. Now, the currencies here, the 8 currencies here, are called majors because they are the most traded currency in the market. Okay, yeah, they are the most widely traded currency in the market. Okay, and each of these currency have they have their own characteristics and other things. So just know that when we say that these 8 currencies are the most widely traded currency in the market, it means that they are very liquid. In fact, the United States dollar makes up for almost 50, almost 50% of the transaction in the forex market, and that's huge. That's huge. I think it was around 30 to 50, something like that. So in our next class, I'll be talking about I'll be extending our the talk on buying and selling of currency, and we'll see how far we can go from there. Okay, see you in next class.